Oliver, a couple of weeks ago, the German pharmaceutical company Bayer launched an offer for an American nutrition and vitamin company called Schiff. I think $1.1 billion was the price, a fairly hefty price at the time. Now Reckitt Benckiser has come in and is starting to spoil Bayer's party by launching a much bigger offer for Schiff. This is a fairly big deal in the whole vitamin sector, but you know, I wonder whether there's any kind of value in an offer like this.
Well, Reckitt will certainly be hoping so. It's offered a big premium to what Bayer had offered for Schiff. Bayer had offered $34 a share. Reckitt has offered $42. That's a huge 82% premium to where Schiff's shares were trading just before the Bayer offer came in. So if you're a Schiff shareholder, you're very happy with the way things are progressing here. Whether Reckitt can get value out of this is a different question. It's a nice market, vitamins and nutritional supplements, despite lots of medical scepticism over whether the vitamins are worthwhile or not. The market's growing at about 8% a year according to Euromonitor. So it's a nice market, but still it's a big premium being paid.
No, it's a nice market, particularly in the US, obviously, where there's a lot of over-the-counter vitamins, and you know, you see row upon row of it in the big pharmacy chains in America, and it's growing as fast as you point out. I just wonder whether for a sort of old line pharma and consumer goods companies, there is actually the real value in this sector that they're looking for.
Well, Reckitt thinks there is. Reckitt's argument in why it can offer so much is that it's a consumer goods company and it knows how to sell things as consumer goods. Vitamins and supplements as a market is dominated by pharma companies such as Bayer at the moment. Reckitt says that by bringing these products into its own portfolio, it can do the same thing as it does with its so-called other power brands and give it the big marketing heft, and really it can increase the sales. There'll also be cost savings for Reckitt, but they'll really be hoping to increase sales.
Right, and can Reckitt afford it?
Yes, in the context of Reckitt, it's fairly small. $1.4 billion is what they've offered. Reckitt has very little debt. It generates lots of cash through its existing operations. Its net debt is only about 1 times its earnings even after this deal. So it's very affordable for Reckitt, and it's done a lot of deals in the past. So
yeah, I guess the question then becomes whether it's going to create value. Clearly, Bayer thought it was at $1.1 billion. Reckitt thinks it is at $1.4 billion. I guess the question is Bayer going to come back and can it continue to see value being squeezed, and what exactly might happen next? Because it's really putting it up to Bayer here. I think.
It is. I think Bayer would struggle to justify a much higher price than Reckitt is offering. I think Reckitt probably will be just about be able to justify the price if it can squeeze out the cost savings and the extra sales, but it would need to do both of those. But for Bayer to come in and offer even more than that, I think is unlikely.
Okay, well, it's a very interesting takeover battle going on in the nutritions and vitamins industry. Let's see what happens next. Thanks, Oliver.